Good day and welcome to Explore Protect YouTube channel to the Money Magnet series. We welcome you here. I'm your host, Dr. Meiya. If you are new to this channel, welcome. You came to the right place where entrepreneurs hang, where entrepreneurs learn. So if you're new, please subscribe to this channel. And while you're subscribing, just also turn on your notifications so that each time we've got new video for you, you can be notified and then you can come and engage. Also spend some time on the channel because you'll find there are so many resources for entrepreneurs like you. Again, when you're done with this video, please comment on it so that we can have a conversation and we can engage. Now, you joining us, we are on the series of business valuation. If you missed the introductory one, please go to the previous videos and you'll find the introductory video where we're introducing this concept of business valuation. So today we want to move and look at market cap as one of the valuation models that you as an entity can use either to value a company or to value other companies, for case if you want to invest into those companies or you're considering to buy another company. So you can use business valuation in different reasons. We've already said really the whole essence of valuation lies in both the art and science, where the science we're trying to be more objective and looking at the estimates and modeling capacity, and the art revolves around the exposure, the experience, the practice, and the knowledge. And when we're doing this market cap, you'll see where we're combining these two concepts of both the science and art to do the valuation, or at least to try and comprehend business valuations. So these are the 6 ones that we're really going to be looking at. And today we are focusing on the market capitalization as the valuation model. So let's dig in and enjoy this. So what is market cap valuation approach? It really refers to the dollar amount of the market value of a company and the product of that with outstanding shares. Now, 2 things that we already realize here is that this presupposes that the company is publicly trading, and it also it's company trading, because these are market values, looking at the share price, which is a function of what the market said is the share price. What could have done, or what we could do if you're an entity that is not listed, we could work out that there are proxies for share price, which we're not going to engage in this. But if you really want us to do that, if you're a privately owned company, you don't have the share price, there are many things that we can use, or many ways we can create a proxy share price. So let's have a conversation beyond this. And as I said, and this is and also looking at the market value. So it's the market value and the share price, and these are market dynamics. Now, it's really, as I've said, the market cap, you're looking at the product of those outstanding shares and the market price. And if it's not listed, I've said, you could work out what is the proxy for a share price, and there are a number of ways you can do that. Now, by this time, you could probably see that the market cap model or approach is really used to determine the company size. And that's where the multiplication will probably inform you from your mathematical inclination that that's what we're doing here. Now, so when you look at market cap as an approach, I've already said, you're really looking at the size of an entity. Why this is necessary, it's critical. It might as well be that you're looking for investing, and your investment strategy is such that you want to invest in either large market cap companies, medium or small. I mean, if you're looking for revenue or future cash flows, you want to look at companies with large market cap where there's stability, there's not much volatility, there is to a certain degree some certainty of future cash flows in way of dividends payouts or whatever the case may be. Whereas if you are looking for a highly volatile, probably high returns, agile companies, you're looking at small entities. And as I said, it could be for the investment approach, or it could be that you're looking to buy into an entity. Again, it's critical to realize that the market cap is really one of the important analytics if you want to compare companies, and the context within which you want to compare companies. It could be one of the reasons I've just stated above, either you want to buy or to invest or whatever the case be, or to compare your entity with other companies. And lastly, there are two things I want us to also be aware of when you're using the market cap approach, is that the prices of stock are never stable. They change or most of the time. And again, what you also need to be careful, not necessarily everything has been taken into account in determining the market, the share price. So you might still need to do a detailed analysis to come to a reasonable or fair value of the share price. And secondly, and I think you need to know that if this is a listed entity and probably in a program of share repurchases that can alter the size, now, the size of the company from the point of how many shares are outstanding or they've been repurchased. Now, what I want us to do is just want to look at three scenarios to understand this concept of market capitalization. And really, if you look at this entity, you've got 5 companies here that you want to compare. You can already see that here, one thing commonality here is that they all have the same shares outstanding and varied share prices. And here is a market cap. The variable here, we've kept the shares the same. So we would have been looking at companies out there with the same shares out, but they will have different share prices. And when you look at the market cap, this is how their market capitalization will look like. Now you can see from this that company number 4 here, with the lowest share price, as you have thought, will have the lowest market cap. Okay, and as you can see there, the smaller bubble, that's your company number 4, and company number 5 with the highest share price, with the same number of shares, will have the larger market cap, and as it's shown here. Or we can look at it differently, where we look at the same share price, which highly happens, but the same company with the same share price but different shares outstanding. So in this case, we're looking at a scenario like this, where, as you can see there, these companies are trading the same share price, but the shares that are out there are different. Okay, now I don't know why we want to look at the same share price, but I'm just hypothetically speaking, this is where the art is coming in. This can really happen. There might be a reason why you focus on the price, but you want to juxtapose that to the shares outstanding and work out your market cap. So here you can now clearly see that company 1 here with shares outstanding of 100 shares and the share price of $100 with a market cap of 10,000 is the one with the lowest market cap. And incidentally, in this case, again, company 5 with 4,000 shares outstanding, still trading at $100 becomes a 400,000 market cap and is the largest there. And lastly, you can look at the same companies, same 5 companies, but here really this is what is more a reflection of what the market would look like. Shares will never be the same out there, and so is the the market price, share price. So this is more or less what it will look like ideally. And here it's when you look at the market cap. Again, in this case, let's have a look. The company with lesser shares outstanding, it's company number 1, and incidental in this case, we also chose $30. So it's market cap of 30,000. There it is. And the largest company in terms of market cap is company number 5 with a share price of 150 and shares are standing there. So that's basically what looking at the market cap as a model could be. What you can see, we really look at how we compare companies depending on the reasons why you want to value a company. They will then make decisions based on these examples that you did. I hope you enjoyed the conversation. It's your doctor here, Finance at Financium and at Money Magnet, Explore Protect. Please comment on this video. Let's have a conversation. And as I said earlier, if you're new here, please remember, before you go, subscribe and switch on your notifications. If you need to be in touch with me, below this video